Welcome to the Deep Dive. So today we're tackling a big one, right?
Yeah, the U.S. Federal Reserve's latest move, those all-important benchmark interest rates.
Exactly. We've got this report here from Money Control Hindi, dated just yesterday, May 7th, 2025.
Okay.
And our mission really is to kind of cut through the jargon, understand why the Fed decided to hold steady this time.
And what that might signal about their thinking, yeah, and maybe what it means for, for you listening.
Right. The headline seems to be this wait-and-see approach. And apparently, experts weren't too surprised.
No, not really. It seems this was largely anticipated. But we're going to unpack what might look like a non-decision, but actually tells us quite a bit.
Okay.
So the Money Control India report, it confirms the Federal Reserve has, done it again, kept the benchmark interest rates unchanged.
Still in that same range.
Yep, still 4.25 to 4.5%. And this came out of the latest meeting of the FOMC.
The Federal Open Market Committee.
That's the one. The Fed's key group for making these kinds of monetary policy decisions.
Okay, so it's not just a one-off then.
Yeah.
This holding pattern, it has some recent history behind it.
It does. The article points out this is the second meeting in a row where they've held rates steady.
Right, following the March 2025 meeting as well.
Exactly. So, second time running, and actually the third time since December 2024 that they haven't lowered rates.
Okay, so the last actual cut was back in December last year.
That's what the report says, yes.
So the big question then is, why? What's behind this continued pause, this wait and see?
Well, what's really interesting and what the report highlights is this idea of policy uncertainty. That seems to be a key factor.
Policy uncertainty. What does that mean in practice?
Essentially, the FOMC is saying, look, there are pretty significant risks on both sides of our main job description, what they call their dual mandate.
Which is keeping employment high and inflation low.
We got it. So they're worried about the risk of unemployment maybe starting to creep up, but also the risk of inflation just kind of sticking around, being persistent.
So it's like trying to balance on a beam. Don't want to lean too far either way.
That's a good way to put it, like steering a ship in, choppy waters. You don't want to overcorrect.
Sounds tricky. The article even refers back to comments from Jerome Powell, the Fed chair, from January 2025.
Yeah, it does. It reminds us that back in January, Powell basically signaled, hey, we're not in any rush to cut rates.
Yeah.
He said they needed to see the right kind of data, appropriate data, I think was the word, on both inflation and jobs before they'd move.
So this cautious approach, it's not exactly brand new then. It's been their thinking for a while.
Seems that way. Consistent caution. They don't want to jump the gun and then maybe have to backtrack later.
Makes sense. Now, let's rewind a bit. You mentioned the last cut was December 24. The article touched on the period before this pause too, didn't it? What were the cuts like then?
Absolutely. So the Money Control Hindi report, it notes that December 2024 cut was 25 basis points.
0.25%.
Yeah. Right. And a basis point is just, 0.01%. But what's significant is that December cut was actually the third cut in a row at that point.
Oh, really? 3 in a row?
Yeah. Before that one, there was a larger cut, 50 basis points, back in September 2024.
0.5%.
And then another 25 basis points, so another 0.25% in November 2024.
Okay, so quite a bit of downward movement in rates towards the end of last year. Exactly.
A series of cuts leading into that December decision.
And after that December cut, that's when we landed in this current target range we keep mentioning, the 4.25 to 4.5.
That's right. That 0.25% reduction in December brought the target for the federal funds rate, that's the rate banks lend to each other overnight, down to that 4.25% to 4.5% range.
And the article also mentioned something about expectations back then, didn't it, even after those cuts?
It did. It reminds us that even back in December, the Fed was apparently indicating they only foresaw maybe 2 more rate cuts for the entirety of 2025.
Wow, okay. So even then, they were already kind of managing expectations about how quickly or how much further rates might fall this year.
Seems like it. The expectation for really aggressive cuts was already being dialed back.
Right. Okay, let's switch gears slightly. The Fed makes its announcement, holds rates steady. How did the financial markets react? What did Wall Street make of it?
Yeah, the market reaction. Always interesting to watch. The report indicates it was, a bit varied, actually. Not a single clear story.
Oh, not just straight down on the news.
Not entirely. The S&P 500, the broad market index, it had been up earlier in the day, but it reversed course and ended up closing down about 0.5%.
Yep. I'll say, so some disappointment there.
Seems like it. And the NASDAQ composite, which is heavy on tech stocks, it saw a slightly bigger drop, maybe around 1%.
Right. Tech often reacts more strongly to rate news. But you said varied. What else happened?
Well, the Dow Jones Industrial Average, the Dow 30, it actually managed to finish the day with a slight gain, just 27 points up, which is about 0.1%.
Huh. Any particular reason for the Dow bucking the trend?
The report specifically mentions that Disney's shares had a good day and that positive performance helped lift the Dow average overall.
Interesting how one big company's stock can sometimes influence the whole index picture like that.
Definitely. So yeah, not a uniform reaction across the board.
Okay, so bring this all together now. Based on this Money Control Hindi report, what are the sort of key things you, listening at home, should take away from this latest Fed decision and the market's kind of mixed response?
I think if we connect this back to, your world, the biggest takeaway is probably the Fed's ongoing sense of caution. They're clearly navigating an economy that's giving off, well, mixed signals.
Those choppy waters we talked about earlier?
Precisely. And their central concern, that worry about both potentially higher unemployment and inflation that just won't quit. That's the core reason they're staying put for now.
And those two things, inflation affecting prices, unemployment affecting jobs, those obviously have a direct impact on people's finances.
Absolutely. The report isn't making specific predictions, of course, but it really highlights this balancing act the Fed is performing. And these factors, inflation and jobs, are fundamental to your financial situation.
And the market reaction, what does that tell us?
Well, even though it's mixed, it just shows how sensitive the markets, and by extension the broader economy, can be to every little signal or move from the Fed. Their decisions carry a lot of weight.
Right. Okay, so just to quickly sum up then, the Fed hit pause again, kept interest rates in that 4.25% to 4.5% zone.
Yep.
Main driver seems to be this policy uncertainty, worries about both sides of their mandate, inflation and employment.
Continuing that wait-and-see stance they adopted after making those cuts back in late 2024.
Got it. And the immediate market reaction was, well, a bit messy. Some indices down, one slightly up.
Pretty much sums it up. And, this kind of leads us to a final sort of thought-provoking question for you to mull over. Thinking about those two main goals, the Fed has maximum employment and stable prices, and looking at all these different economic signals flying around right now.
Yeah.
What specific bits of information, what data points do you think will ultimately be the most critical? What will really push the Fed to make its next move, whether it's a cut, a hold, or even something else down the line?
That's a good question. What signals will be the deciding factors?
Exactly. It's a complex picture, and even just looking through this one report gives us a valuable snapshot of the forces at play, something to definitely keep thinking about.